Very good afternoon to you all, and let me once again welcome such a stellar panel. I don't think even in my dream I would have managed to, get together a panel which represents Indian insurance industry at this level. So thank you once again, gentlemen, for agreeing to be a part of this panel. So in the next 1 hour, what we'll do is this. We will come to the end and discuss whether it is a UPI moment or not. But let me start by what Mr. Joshi, the IRDA member, talked about in the morning. And he gave an indication of how the insurance industry, the life insurance industry, actually played a stellar role in the management of COVID. So my question initially, if I could, ask you all gentlemen to let us know, let this group know that how has the COVID 2 years, because we're just emerging out of COVID, hopefully. I hope the new sort of thing does not upset us once again. So how has COVID been managed by this industry? And what are the key takeaways from this kind of event, Black Swan event? So may I start with Mr. Chugh? If you can just let us know in brief. All of us will go to the same thing because I think this is a central issue. And this is one industry which has done, I understand, a wonderful job in managing the COVID impact on people, society, entities. Mr. Chugh.
I think it was a transformational catharsis. Mm-hmm. I don't have a better, I know it's a complicated set of two words.
Yeah.
I don't have a better set of two words.
It tells everything actually.
Yes. So that is really my headline statement on that. What it did was it got customers to understand. Unfortunately, when customers understand, for us it's usually not a very positive moment, that how important life insurance for them is. As a result, the sector grew despite everything else happening in the world. There were a lot of other sub-formats in which we kind of gained. The importance of digital, the importance of innovation, the importance of customer in the center of all decisions, the importance of risk and capability to keep processes simple, the importance of not a face-to-face meeting in life insurance, or the possibility of that. A lot of these trends kind of got super fast done, they got accelerated, and that's the right word. I think some things that we struggled on was on the term policies, particularly the core product, onboarding of customers at the back end, where we banked a lot on reinsurers. And I think that was a homecoming moment as well, where we figured out, jo karna apne aap hi karna, you have to kind of bank on yourself. And while the reinsurers had the data for the whole world and they could see, and it's good, but customers needed us there at that moment. And that is what I think we learned, that the processes had to be simplified and we had to take more risk on our books, and a lot of us have done that. At the same time, I think the insurance sector really stood up to the task in terms of offering its core value proposition, which is paying claims and paying them on time. And I think IRDA played a stellar role in that as well. And that is where I think customers did test the fact that insurance is important and it does pay to have insurance.
Fantastic.
I'll just leave it here.
Sure. Mr. Kannan, what would be your takeaway from the COVID experience from a life insurer point of view?
Yeah, good morning. Thank you for having me, first of all. And I hope through the next 1 hour, we have a good set of discussions. I won't repeat what Tarun said, but just I'll add on to it. Looking at the start of that period, without knowing what is going to happen when the lockdown was announced, and in the first and the second wave, especially second wave, where the mortality development was very high, it was a difficult period for the industry. That's the first thing, because it was completely unanticipated. We didn't know what was coming. At the same time, I would say that COVID was really the moment of truth for the industry, in the sense that why do we exist as life insurers? Ultimately, to pay claims. I think that is our reason for existence, and when the customers or customers' families need us the most. So the moment of truth was tested, so to say, during this COVID period. So Tarun talked about the claim payouts. So we had to make sure that all genuine claims were paid on time. And the claims volume really spurted during that period, which we weren't really prepared for as an industry, because that kind of death claims is unusual. So long story short, I think industry stepped up well, thanks partly to the regulators' intervention as well. And I think we came out quite okay in terms of meeting the customer's promise during that period. That was the big takeaway for us, that our purpose of existence was reminded to us during that period. Yes, business is okay, fund management, all that is fine, but ultimately a life insurance company has to pay the claims when there is a death of our customer. I think that was the primary thing. Second, I think the need for insurance and the awareness became much higher. That is a takeaway. By no means I will say that it has really reached where it should be, because it happened for a brief time post the second wave, when people realized the importance of insurance and the demand just spurted, of term insurance especially. Of course, in the third wave, the mortality outcome was, luckily for the country, it was not bad. So obviously, a little bit of waning of that interest happens. But net, I think, post-COVID, compared to pre-COVID times, we have a better understanding and awareness of term insurance. I think that is the second takeaway. And the third takeaway is way of doing business. Be it the customers or the company or the employees, we were forced to do a little bit of technology tools were always there in the industry. But the adoption is about the necessity being a mother of invention. Unless you push to it, you don't adopt. Be it our employees or the distribution partners and everyone. So we were pushed to adopting technology which was always available, tools are available. So for example, in our case, if you look at the customer self-service post-COVID, it's 95%. 95% of the transactions are done through customer self-service. So even the sales had to be done on collaborative platforms, because we could not go and meet with the customers. And we had to really look at different ways of doing things, and work from home, work from office, all that we have heard of.
That's right.
So the whole technology adoption went to a different level, and I'm hoping that some of those good takeaways will stay with us even in the physical world, more of a physical world compared to the COVID world. So these to me is
Sure.
2-3 takeaways of COVID period.
Thank you. Mr. Pannak, what would be your assessment of how it, Mr. Chugh called it a transformational catharsis. Mr. Kannan talked about the moment of truth. How would you describe COVID?
I fully agree to what Mr. Chugh and Mr. Kannan said about it. And we should thank ourselves as a country. We should thank the regulator. We should thank the life insurance industry for standing up to such a difficult situation. And I think if there is some economic revival that is happening, some analysis can be made, and I think we can trace it to the good work done by the life insurance industry. So the figures, that means whatever IRDA statements say, it goes up to 50,000 crore in all total. Out of that, COVID might be a certain set of amount. But this amount of death claims being paid to the countrymen, and that certainly helps the economy. And the moment of truth was, yes, we knew how to manage in a COVID-like situation. There was adoption of technology by all the companies. We could understand that we could work from home. We could onboard policies through our agents, through online.
Yeah.
And a lot of transactions that can happen, like everything being credited to the accounts of people and all. Like we had to reach out to the district collectors, and they gave us the names. From the names, we traced out the policy numbers. We waived the policy all other conditions in the policy document. And we ensured that within a period of 7 days, the claim is paid to the account, so that there is no difficulty to any of the dependents.
Okay.
So for the 2 years, we managed in a nice manner. As Mr. Kannan told, it was difficult time financially.
Correct.
But somehow we have been able to overcome all those situations.
Okay.
We hope that situations can be normal and without anything being affected to existing policyholders regarding their bonus rates and other things.
Okay.
So we have tried to maintain, we have tried to ensure that policyholders' reasonable expectations get maintained even after such a difficult situation.
Okay.
So we hope that things will become normal, and we also have learnt that in a difficult situation, yes, we are an organization, we can stand up and we can manage not only in the financial front, but also administratively and technologically.
Okay. Thank you, Mr. Patnaik. Mr. Patnaik's takeaway is that the industry stood up to the challenge, and I thought the additional point he made was that the Indian economy actually gained from the way the life insurance industry handled the COVID crisis. Mr. Sharma, what would be your takeaway from the way the industry handled the COVID situation?
Thank you very much for having me on the panel. One of the things, the first thing that we learned was that a good business continuity plan never goes waste. So, really speaking, nobody knew that such a thing could happen, and nobody in their wildest imagination would have thought, things would be so drastic. But thanks to having a good business continuity program plan, we were able to tackle that. So almost within 72 hours of the lockdown being announced, we were able to start processing claims, taking calls, diverting customer calls to our own people where the call center couldn't take it. And all those things were put in place. So, one of the things that we learned was that it is always nice to plan ahead and have a good business continuity plan, even though events may look very remote, but we need to have a very solid business continuity plan on that. So that was one of the things. And digital. So, to be at the forefront of technology was also very critical. And this was not something which we could have managed on the day that the lockdown was announced. So the idea that, we had tried to digitize many of our processes much before COVID struck, and that was what helped us to put together an alternate sales process, put together an alternate process from end to end, from application to claims, maturity claims, death claims, so that we could do it very quickly. Within a month, we had a full process which could be done digitally without a face-to-face. In fact, we used to have even digital CRPs and customer relations programs digitally. There were people who innovated. Our agents also adopted technology very fast, but that was possible because we had gone on that road to adoption of digital technology much before this event happened.
That's right.
So those are some of the learnings that we had early on. The other thing we learned was that conventionally insurance, or when you talk about mortality, you are thinking about old people, sick people, and vulnerable sections of people, poor people. But now we found out that there are diseases which do not respect any of these ideas. So insurance is something which needs to protect all these people. I think part of what Mr. Kannan also said about the awareness of insurance, being increased, was because you saw people like you getting affected, and not just the people. Like, for example, cholera or something like that happens, you are least bothered because you drink bottled water or you have an RO at home or whatever. So this was a total shift in that paradigm. So that was the other thing that we learned out of this whole thing. So mainly, and the other thing is the awareness I do agree with all of them, all of the speakers before me, that the truth is in paying the claims. So we were able to do that, and I think as an industry, we matured during this period. So that is something which I think has.
Yeah. Thank you, Mr. Sharma, for this. Your takeaway, as I would understand, is that the importance of a business continuity plan, the role of the digital technologies, and I think these are the two main points that you have added to this excellent analysis by three of your predecessors. Mr. Tripathi, if I can come to you and give us your assessment of how the industry lived up to the challenges of the COVID.
Yeah. When I reflect, I personally feel immensely proud of being one of the members of life insurance industry. And the way to assess that, all of us are financial services institutions. We work through our balance sheets, we have our capital requirements. One thing that I observed is during this period of adversity, I didn't find any of the players go bankrupt, go bust, run for capital, etc., which means the conservatism which got deployed in each of the companies, and thanks to the regulations, has been of a very superior order. This was a very unprecedented situation, once in 100 years event, which can cause drain on capital, which can make companies go haywire. I saw all the companies perform really beautifully well, which talks about the financial strength and the balance sheet depth of each of the companies. So number one. The way the regulators supported, I think they were in top gear. And all my colleagues will agree that the chairman himself, member FNA, member Life, all of them were constantly in touch, like never before, being on WhatsApp messages, etc., always checking on what we are doing, what help is needed. So I think that was a great tailwind that we got to manage. And the third, I mean, it was really, from my perspective, breaking of stereotypes. We always thought it is a face-to-face sales. It has to happen being in the office. The processes have to work in a certain way. Claims have to be settled in a certain way. All of them just got busted. And more at a human level, the way the industry came together, each of the employees and agents of life insurance industry came together to help the humanity. I'm sure all my colleagues will agree that they will have a few stories of heroism actually going above and beyond the calls of duty to help the customers, either to help at a human level or settling the claim, helping the families. It was completely unprecedented. So coming out of this experience, while all of us have our own learnings, I believe that we're all very proud of being in an industry which was relevant at the time of COVID, which did whatever is needed. And everybody will be very happy to know that we all tried very best to increase our claims paid ratios. I saw in many companies that the claims paid ratios got improved. I'm sure all my colleagues had decisions where they were reviewing claims on finding the reasons to pay rather than finding the reasons to decline, which again at a human level is a very big thing. So a lot of experience, a lot of learning. We come out quite enriched. The only letdown is as soon as the COVID went away, we saw a decline in a desire to buy term plans. If you were to look at Google searches, they're down more than 30%. The overall term acceptance has gone down. People not buying. Which is not great. Actually, this country needs to continuously work. I mean, we don't need a situation like COVID to remind us that we need protection. So we need to be on that journey. But overall, very happy and satisfied with the way we handled.
Thank you. Thank you for this explanation on the importance of delivery systems, importance of not getting into a stereotype model of governance, responding to a challenge, which is, once in a lifetime challenge. Why I started this discussion with COVID is because this is one industry, in my view, which had the strongest connect with this black swan event, which changed the way we lived for 2 years. And I thought that it is necessary to start our discussion with this, even though in a normal BFSI summit, COVID will not play a role, but because you guys are the unsung heroes of the entire COVID thing. And may I request the House to give a vote of thank you. Now, I want to sort of start off from where you ended, Mr. Tripathi, and I would ask, and any one of you can answer this question, that if, God forbid, such a calamity or such a crisis were to arise again, would you have tackled the same challenges as you did in a different way? What would be your different way of tackling it? What are the gaps that you felt compromised or undermined your efficacy or effectiveness? Is there something that comes to your mind that, listen, if a similar challenge comes to me, I would look at it in a different way? Is there anything, anybody? Mr. Chog, Mr. Kannan, Mr. Patnaik, Mr. Sharma, Mr. Tripathi?
Yeah. Basically, at a human level, we would handle pretty much similar way.
Okay.
But when I look at where we struggled, I think there were the maximum number of struggle across all companies happened at a claims level. We were all capacitized to handle claims which were on a BAU basis. So we suddenly got claims worth 5 years in 1 year. Mm-hmm. So, we definitely struggled actually to process the claims. And equally at the same time, because of the losses, the reinsurance companies became very hawkish in terms of what they wanted us to deploy. So if I were to really correct one big thing, capacitizing properly, automating, and perhaps having clear-cut agreements upfront with reinsurance companies as to how we'll deal with it so that we could process the claims earlier. Because in many of the cases, we took longer to process the claims while we did process, but it is not desirable that we pay the claims late.
Automation meaning what?
I think the overall processes are quite manual. Processes are quite manual in terms of how the claims comes. Then the investigation process. There are investigation process where we go and validate. They are generally field investigations. When COVID is going on, our ability to actually do investigations were fewer. We got into debates with reinsurance firms as to who will settle in whose favor, etc. I think those things could be done better, number one. And number two, overall, the kick-starting this process. So moving from, you remember the 24th of March of 2020. That's when the big lockdown happened. I think all of us came back to action, but it took a bit longer. For some companies like us, it took 3-4 days. For some companies, it took a month. I think to the point Mr. Sharma was making, we have to be prepared like this. Now we are. So if something of that kind were to happen, we will be back to action very, very quickly. Okay. So those two come to my mind at the top.
Okay, good. Anybody else would like to respond?
One of the other things that we would probably do differently, I mean, this involves all the people, doing things differently. So one of the things is to increase the awareness. So I think we need to make, more efforts to increase the awareness around insurance.
Fair enough.
We also have to understand, that any kind of insurance, we keep talking about protection products, but any kind of insurance that you take is good enough insurance, as we saw in COVID. For example, a person who takes makes an investment in a ULIP product, so it is a unit-linked insurance product. You should never forget that insurance part of it. That is a major item in that, and it cannot be confused with an investment product, pure investment product. So what happens is that a person took a ULIP plan in 2020 or 2019 and unfortunately died during the COVID period. His family gets 7 times, 10 times the cover. 10 lakh rupees invested brings in 70 lakhs to 1 crore. that is not to be sneezed at. It is a good
Sure.
insurance. So really speaking, any kind of insurance, whether it is credit life, attaching your loans with insurance, or buying ULIPs, or buying traditional products, any kind of insurance is good, and we need to have more and more of that insurance, and that awareness has to be created. There needs to be less noise around the caste system of, protection insurance and T-ROP and
Absolutely.
things like that. It should be only
Sure.
insurance. You
Sure.
get insured whichever way, whatever is convenient for you and your, your plans for the future. But you have to make sure that everybody is insured, so that one thing is that awareness to be created.
So who should create that awareness?
All of us.
All of us.
The
Great.
insurance industry, of course, has the responsibility, but then a lot of it will depend on the media, on the
Absolutely.
government agencies to not pull down the industry.
Absolutely.
And try to strengthen the hands by saying, like the regulator has been doing a wonderful job. But it's not only the insurance regulator's job to spread insurance. It is good for the entire country.
Absolutely.
So, all the arms of the government, the media, everybody should be talking in one voice that insurance is good for you.
Absolutely.
And it is good for the economy.
Mr. Kannan, you wanted to say something? Sorry, Mr. Patnaik was, yeah.
I was just agreeing to what Mr. Tripathi and Mr. Sharma were telling. Because all of us know that India has to traverse a long distance
Yeah.
to call it a really insured country.
Uh-huh.
I don't want to deal with statistics, but again, that is, as Mr. Tripathi told, after the COVID, the awareness came down.
Mm-hmm.
And
Yes.
Mr. Sharma is telling that, okay, any sort of insurance, let people go for it.
Yes.
Because people should be thinking that, yes, part of my spend should be for life insurance in whatever form. Then only the industry can grow to real, that is, expected levels. So those are areas, and these are learning points, because unless a large number of people get insured, then the stresses during situations where this calamity-like situations will be
Sure.
there, it will be very, very difficult.
Okay, okay.
So otherwise, that means the industry is prepared, I think, and
Sure.
they have developed enough capacity.
Absolutely. Mr. Kannan?
As you rightly started off saying, God forbid this situation doesn't happen.
Sure.
I also hope that such crises don't happen. 1 in a 100-year event doesn't happen. We hope so. But having said that, I have a slightly different perspective.
Sure.
With the way the industry has handled the situation.
Okay.
I think it gives us a lot of confidence of facing any such situations in the future. That's
Okay.
the way I would. Any crisis, it's always the initial phase of the crisis. You don't know the magnitude of crisis. You don't know how you'll have to be nimble to operate the ground realities. And the way we have seen post-global financial crisis, each crisis has been quite different from the previous one. So to that extent, I don't think I can say here that I will have planned for any future crisis ever. So I don't think we can take that approach. What I would say is that taking a lot of confidence from what we have done, I think that is very critical for us. And as Prashant mentioned, we are quite proud of the fact that we are part of this industry having gone through this. So maybe a takeaway is that this resilience of our operations has to be maintained. What do I mean by that? We are probably one of the few industries in the financial services sector who never ran to the regulator for any dispensations during that time. Asset side, pristine balance sheet across. In our case, we have 0 NPA in 22 years of our existence. Several other companies, the overall industry NPA is minuscule. Never wanted any dispensation. Capital, adequate. We didn't go to the regulator asking for more capital during that period of time. And yes, a few companies took losses for a particular quarter or so. But as I said, that's a moment of truth. If the life insurance company doesn't make a loss during the period of 100-year pandemic, that means we have not done a good job in terms of coverage.
Sure.
So despite all that, the fact that we have been resilient, sort of takeaway is that let us keep ourselves resilient even going forward. Be it in the capital metrics or asset quality metrics or technology adoption or the sensitivity to pay claims. If you do that job properly, I think crisis can easily be met by the industry. That's the way I would put it.
Fantastic. Shuk,
I'll keep it short. I think everybody's just talked about what is an insurance company we all did. And I think as an insurance company, I think it's pretty much tested and the model is all there. I just make one statement around as a corporate.
Yeah.
Because not only do we have responsibility to our customers, but to our employees as well. I believe a few of us, including maybe I myself and the company, took a little bit longer, maybe a weekend longer, to respond.
Oh.
I remember that weekend we lost 7 people, 7 employees. Reading the signals, and we could see the signals coming from France, Europe, China. Reading the signals quickly and implementing quickly, do not debate too much. A crisis has to be dealt differently, even for our employees. There was this little bit in which, were we essential services or were we not essential services? I think that clarity took some time.
Okay.
And in that, I think we all could have been a little better. I would have been 7 employees better.
Thank you. Thank you for this candor, the frankness, the forthrightness of all of you. To be honest with you, when I started the discussion on COVID, I had not anticipated this kind of candor and forthrightness, and I'm truly proud of conducting this discussion. Thank you once again. We are in a very engaging discussion. We will get into other issues, and it is not a session where we only talk. We would like you to also ask questions. So therefore, keep your questions ready. There's a mic there, and I will not come to you at the end of the discussion, but in between the discussion. So keep your questions ready. And I don't know who is there. Is Ridhima there with the mics or not? Just wanted to keep you, alerted. Mr. Chok, I wanted to come and ask you and, take the round once again like this, but I'll ask you different questions to each of you. Mr. Tripathi talked about the decline in the interest for life insurance policies after COVID was on its way out or was being phased out. Now, that raises the larger question of penetration. We all know that, why penetration is poor and everything. Now, would you recommend to this House what 2 or 3 steps, and after which, if others are willing to offer some extra suggestions on what needs to be done to improve this penetration level, which we all theoretically, economists and non-economists will all agree that India is one of those countries where the penetration level is poor. But what needs to be done from a practitioner point of view? Can you give us 2 or 3 quick suggestions? Then we'll take it forward.
Yeah. See, there is no holy grail, and honestly, there's no clear one answer.
Yeah.
It all works together.
Yeah.
I think more self-governance and regulation, where I fundamentally believe, and I think most people do, that it's not one India, it's a continent almost.
Yeah.
We're talking about 1/5 of the population of the world. And there's at least 6 or 7 Indias. Hence, self-governance is something that is key. And I think the IRDA is very swiftly moving in that direction. And because you can't have a product, see the use and file, all the things that are you seeing now happening are things which perfectly timed and should be done right now. You can't have a product which is just made once a year, made available to all of India, and approved by the regulator. You should leave it to the life insurer to kind of decide. Something in Kerala will be different from Northeast and so on and so forth. So I don't want to details there. But I think that is the one key takeaway. More digitization and support. So, and again, you can see remnants of that in the regulation. Things like we're seeing Bima Sugam coming in. I think those kind of platforms, honestly, a lot of us wouldn't have thought about. But these are the ones which endorse the sector in a very big way. And with the regulator stepping in and taking a more developmental role versus just, a minute-eyed regulator only, but somebody who's looking at development of the sector. This IRDA, there's a D.
His name suggests.
Yes. I think is a welcome change, and I think we're in the right direction. A lot of this, of course, can be put in a lot of good words, and I can say awareness, I can talk of product structuring, and I can talk of more distribution. Those follow, but I think these 2 to me are the more critical ones.
That one supplementary, Mr. Chok, you talked about self-governance. Now that is very clearly different from regulation. In many industries, including my own industry, media, we believe that it is better to be self-governed than regulated. Are you suggesting that insurance industry is one where probably the mix of self-governance and regulation needs to be tweaked a bit?
I think it's already being done.
It's already being done.
And I can understand from the, if you just look at history of insurance, 20 years only, right? So our products are 30, 40 years.
Yeah.
So it's just been 20 years since
Liberalization.
the liberalization and the new regulations came alive.
Yeah.
Hence they had to regulate. I think the time is apt. COVID has hit us at a time as well, where we realize that if there is need for the product, people are ready to take more of it. And it's just that you need to be more flexible. You need to approach them. You need to be not having one fit-all kind of an attitude.
Okay.
And that requires a lot more flexibility that comes in. And it comes through self-governance and more directional governance. I think which is what IRD is pretty much doing, if I would say.
Okay, okay. Yeah. Mr. Kannan, if I can come to you and take this question little further and ask you about, there is a lot of talk about the K-shaped recovery in this country, where the upper leg of the K is doing very well, the lower leg of the K is not doing well. So my question to you is the life insurance sector largely focused on the upper leg of the K, if K is a symbolization of the Indian economy, and as a result, the large segment of the economy which is in what I call the Bharat, that has been ignored, and what needs to be done to focus on that lower leg of the K instead of just remaining focused on the upper leg or urban India? I mean, if I'm wrong in any of my postulation, please correct me if that is not a problem. So how do you take the life insurance industry beyond the confines of urban metropolises in India?
Yeah, if
Mr.
you really
Kannan.
look at the country opportunity, I would say that for the long-term viability and thriving of all the companies in the life insurance industry, both sides will have to be focused on. For once, I don't believe that the second part of what you mentioned is really a social issue and not a commercial issue. I believe truly that both sides, there is a commercial opportunity for all companies to thrive.
You mean in both the legs?
Sides of K, as you put it.
Yeah.
It is an opportunity for all of us.
Yeah.
So let me illustrate. If you look at LIC's business model as an example, they have always been in a mass affluent kind of a segment, which they have done an admirable job. Then when the private companies came in, when ULIP came in for the first time, I agree with Mr. Sharma that it's not investment, it's investment plus insurance. And people who wanted exposure to market, we could give an insurance and investment combined proposition to them. Probably that could be argued that was targeted more at the affluent segments of the society. Then we had, some time back, PMJJBY driving the mass segment. And while bank could have been the distributors, but I want to tell all our audience that insurance companies were firmly behind the banks in terms of manufacturing the product to be made available. And that is one area where I believe that the overall awareness also improved. And that is an opportunity. And more recently, the regulator has been talking about a product called Bima Vistar, and to be distributed through Bima Vahaks. By Bima Vistar, what do they mean is that at a customer level, why can't I give a composite product? Why is this differentiation at the customer level between life insurance, general insurance, property insurance, motor insurance, and so on, accident insurance? Give them one unit of full risk cover. To be manufactured, and how does it matter to the customer who is giving it? They want to have a product, and if there is a claim, the company has to pay. So come with a combined proposition at a customer level, which could be manufactured or underwritten by different companies depending on their line of business. And to be distributed through Bima Vahaks. At a Gram Panchayat level, they are talking about predominantly women distributing these products. So I think this is an opportunity we should embrace as an industry, because ultimately, if you have to cover 1 billion population, and that is what IRD has talked about, by 2047, they want no Indian to die without life insurance. If that is there, I would see both sides as a huge opportunity. How to make it profitable, how to do it, our job. in the sense, should we bring technology to bear rather than putting large fixed costs? All that is really up to us to do it. But I do believe that both sides there is a huge opportunity. Just to go back to your earlier question on what is to be done, I think we are in a policy sweet spot.
Policy?
Sweet spot.
Okay.
That is how I will characterize the industry now. Because this is a financial services industry, it will remain a regulated entity forever. Because that's important because policyholder protection is paramount. But why I say policy sweet spot, on government side, there have been a lot of policy initiatives. In the last budget, you saw foreign ownership getting increased.
Sure.
The Indian-owned regulations were simplified. And more recently, you saw DFS putting out a paper, why not composite license? Why can't we allow insurance companies to operate in allied activities? On the part of IRDA, they have done mission mode activities. They have already relaxed capital certain lines of business. So I think while we have to do our job, right, Prashant rightly said that we have to do our awareness job, we have a huge tailwind in the form of policy sweet spot. I think this is a golden period for the industry going forward. And with that, I'm sure with our efforts and the regulator efforts and the government effort, I think covering every Indian during this Amrit Kal is going to be a reality.
So you are pretty confident and hopeful that the lack of penetration in that underprivileged section of society will be a thing of the past in the next 25 years or so?
I firmly believe so.
Yeah.
And to your point on the governance, self-governance, Tarun's point, I think it's a good point. But what IRD has done here is that they have formed a committee of regulatory review committee. They have told us that why don't you reduce the number of regulations from 70 to single digits. 70 is the number of regulations in the insurance industry. They're saying, why can't you bring it to the single digit? The idea being not to completely deregulate. The idea being to shift from a rule prescriptive based regulation to a principle based regulation. So principles will be there. This is going to be a regulated industry. Principles will be there. And how to implement the principles, there could be a lot of leeway. And a lot of onus will come on the boards and the governance structure of India. That probably is the way to go. Rather than purely being prescriptive to principle-based, not deregulate, but principle-based regulation with a lot of onus on governance coming on the boards and the executive management of the companies. I think it's a very good place to be in.
Absolutely.
Thank you.
Thank you. Thank you, Mr. Kannan, for this excellent proposition you made. Mr. Patnaik, I would be a little naughty here. And my question to you would be, that the industry has seen an opening up for a couple of decades at least, in the real true sense of the term. And yet, there is a skew in the composition or the share of the market size, different players. And there's one giant behemoth which continues to acquire and retain the share of almost 2/3 of the market. And yet there is, as Mr. Kannan rightly pointed out, there's a policy sweet spot. FDI liberalization has happened. LIC has been listed in the market more. How do you think the life insurance industry space will change and respond to this policy sweet spot? And what are the challenges as a huge entity it faces? Mr. Patnaik.
Actually, life insurance business is always a very difficult business. And there should be a regulator and there should be regulations. But what Mr. Kannan said, that the industry has matured over a period of 20 years. We can sit together and find out what are the rules, what are the regulations, that can be dropped at this moment, and we can sort of a self-regulation. Because today, you see, all life insurance companies, they have to be responsible. Gone are the days when any life insurance company, they can act in any manner which will be affecting their reputation or anything else. So, and if somebody asks me that all the 24 companies in the country today, they are all very responsible companies. They are doing a decent job. They built up the life insurance industry. And going forward, all of us know there is huge space for everybody. Okay, Life Insurance Corporation of India has got a lead. It continues the lead because, okay, we continue to do the good practices that we were doing earlier, and we have learned many things from all the players also. And that means, again, that is with good respect to everybody. Because it's an organizational culture. It's an organizational culture that you respect your customers, you respect your agents, respect all the players who are there in the country and respect the reinsurer. So you can learn from them, because when everybody grows, then only you can grow. If there is not a very vibrant reinsurance industry in the country, then also the life insurance companies get affected.
Okay.
So we know that all of us are first patriots. We're Indians and we desire that India should grow. And all of us know that without a very vibrant insurance industry, whether it is life, whether it is general, whether it is health, then the country will not grow to that extent. And we have seen, like to give a small example, they call something called sum assured to GDP ratio. So in many countries, it is the number of times is used, and I get my point.
That's right.
But here in India, it's a very small fraction.
Yes.
But India is adopting everything from mobiles to laptops to all the technology, all the good things, what is happening around the world. So it's just a question of time when the best practices of the insurance industry as a whole, whether it's life, whether it's general, whether it is health, people will be adopting all those things in India also.
Okay.
So the insurance market will be growing and growing, and nobody can stop it. And all the companies, they have to, whether in life, general or health, they have to continue to do the good things, and everybody will grow. And there is space for everybody, and it will be only good for the people of India, and also the regulator and the country.
Sure. Mr. Sharma, if I can take the same question to you and ask you that, yes, as Mr. Kannan says, there's a policy sweet spot, and yet it seems, from a lay reading of the numbers, that the opening up of the sector, raising of FDI, policy regulation getting a little easier, has not seen too many insurance applications, companies. As a member IRDI in the morning said that there are just about 19 or 20 applications to be looked at. Now, is there an issue there that this industry is not attracting new players, number one? Number two, is LIC, sitting to your right now, is too big, and the fact of the matter is that it took less time for SBI in the banking space to lose its market share when the banking sector was opened up, whereas LIC India is still holding on. Now, is there a private sector, public sector dynamics which is a little different in the life insurance sector? Maybe I will come to Mr. Chok on this question. Why don't you first answer it?
Yeah, sure. The first, one of the premises that you've, put forth, that LIC is having one of the largest shares may not be actually true. They have a lead of 50 years in the industry. And then we have been there for about 20 years. And, the policy sweet spot, which Mr. Kannan correctly talked about, has just come now. So, what happens is that if you look at the entire structure of the industry, the narrative around insurance was earlier as an instrument of saving with an element of insurance. It was never about insurance first. One of the topics that as Indians we shy away from is death. And this industry depends on people realizing that they are mortal. And you start the conversation. My agent, when he goes to a customer, he starts a conversation with death. So he has to bring in the topic somewhere. It's a very difficult topic. So he has to tell the person, suppose you are not there, what happens to your family?
Mr. Sharma, I must tell you my personal experience. Insurance agents, particularly from the private sector, no longer talk about your death.
Yeah, my death.
Yeah, exactly.
Yeah,
the language has changed. It's a fascinating thing myself as a customer, I can tell you.
The topic of death has to come. So that's what I'm trying to say.
They don't even use death anymore. They say, if you're not there, if I'm not there.
It's a very difficult conversation. What I'm trying to say is that when you have this kind of an industry, let me come to the topic of this discussion, the UPI moment.
Yeah.
What is missing? Okay. So the awareness is missing. The need is missing. The awareness of the need is missing. Now, when UPI came about, the ground was fertile for a solution. So what happened was, there is a huge migrant worker community. There is a huge BPO workers community. There is a huge population of IT professionals, etc., who are working away from their homes. And then you have this need for transferring the money from one place to another. And there were means, like for example, State Bank of India branches used to be always crowded with a lot of people trying to only transfer money. Then we had the business correspondence, then we had so many things. And what is missing in this piece in insurance? Everything else is there. You have the payment solutions today for making all kinds of payments. The premium payment to maturity payment, claim settlement, everything can be done. Then you have the data. So you have the data, so the account aggregator model is coming for this also. It is already there in the banks. And then all the data around that, even the IT is connected now today, Aadhaar is connected.
So are you saying the UPI moment is arrived?
Yeah, no, that's what I'm saying. The UPI moment has not arrived with a bang in the insurance industry, only because that awareness of the need is not there. And there you need to have a longer term program. It doesn't happen overnight. You simply can't publish in the media that, go and buy insurance and do it. So now, how do you do it? You need to make sure that it is there in the curriculum of schools. You need to make sure that financial planning, inclusion, insurance, these are taught to people from their childhood, so that by the time they come of an age that they need insurance, they actually don't argue that they don't need insurance. They will just go out and buy it the way they want, and they also understand what they are trying to buy. So that is what I'm trying to say. That element we need to build in, so that we can actually grow. So the market is there. Everybody needs to be insured by 2047. The regulator has very rightly said that we need to insure every Indian by 2047. How will that happen? It will happen because the people will become aware, and you have to create that awareness. Who will create it? We will create it as insurance companies. The media will create it. And then, like I said, the government, the schools, the colleges, they will include it in their curriculum. They will make sure that people realize that insurance is required. It is a necessity instead of an...
So you are saying the UPI moment has not arrived, but awareness, education is required to capitalize on that.
It can arrive.
Yeah. Mr. Tripathi, what would you say? And my question to you is this, that is there something that the question of education and literacy about insurance, is that something that needs to be tackled at an industry level, or society, government, at what level?
Yeah, I agree with, firstly, I agree with Mr. Sharma. The need of insurance is very different from the need of UPI or the need to buy mutual fund, etc. It's very different. It's more covert than overt. Nobody wakes up to say, "Aaj insurance kharid lena."
Sure.
Which means the kind of effort which is required to reach out, propagate, and penetrate will be of a higher order. And then, in that case, we'll have to burn the candle from all sides. Firstly, awareness. Yes, absolutely. It is required, and it will be required over a long period of time. The insurance industry will have to come together. I don't think we have done a great job in terms of creating that awareness. We need to do that. Regulators should do that. Government should do that. Schools, everybody should do that, so that the need is understood. At this point of time, it becomes secondary, because पहले रोजी रोटी हो, उसके बाद insurance हो, ऐसे सोचते हैं. It has to come as a part of the basic need, number one. And number two, I think the big issue that we need to solve is to find a sweet spot of distribution and product combination which can economically, in a robust way, reach out to the lowest.
Yeah.
That is where we have struggled. The industry has actually focused a lot on premium as against sum assured. To Mr. Patnaik's point, we have not focused on sum assured, and that's why sum assured to GDP ratio is quite
coming
poor for
down.
India.
Yeah.
One of the things that we discovered out of COVID is most people were covered, but for very small sum. That was the issue.
Right.
So we need to continue to drive sum assured through a combination of product and distribution vehicle, that could reach out in an economical way to the lowest level, which means the current set of products and distributions may not be able to solve that problem. And that will take longer. So those are
the issues. Okay. You know, I had promised that I will come to you, the audience, and I'm sorry I was so engaged with this excellent discussion that we are having. If there are any questions, 2 or 3 questions, quick questions, please identify yourself. And if you have this question for any one person here, identify his name, and please go ahead quickly.
Hi, sir.
Where's the mic? Yeah, go ahead. Yeah.
Sir, I'm here. Can I go ahead with the question?
Yeah, go ahead.
So coming out of COVID, looks like the insurance industry has become super efficient, both from acquiring as well as claims processing. Now, from this standpoint, moving forward, looking at the scope of growth with respect to the lower sections of the society that exist, what are the 1 or 2 things that each of you are looking at differently in order to acquire and increase market share from those sections of the society?
Okay.
And are there any existing bottlenecks in improving efficiency further when it comes to both acquiring and claims processing? Both sides.
Okay. We'll take this question also, and then please go ahead.
Yeah, my name is Lavanya June. My question is to Mr. Sharma. He spoke beautifully about the ULIP and the other insurance products. My question to you is, sir, that on one aspect we talk about the awareness, and secondly we are talking about the UPI movement, that we need more awareness. But do we also consider the bottom factors, which are the policy or the clauses and the sub-clauses when it comes to maybe the tenure where which we cannot withdraw the amount? So do we need some reforms on that front as well when we talk about insurance? Because public is aware, like everyone wants to have some kind of insurance because we understand insurance is a risk cover, right? So do you think there needs to be some reforms on that front?
Okay, I've got your question. Mr. Sharma, would you like to respond to it?
See, I'll tell you one thing. Insurance, is kind of a reverse lottery kind of thing. Okay? Everybody pays up small amounts and somebody gets a lottery. If you want everybody to get a lottery and everybody to get back their money if they don't win the lottery, then the lottery fails. Insurance is the reverse kind of thing, where everybody pays the premium and some people get claims when it is required. If you say that those people who actually come to the claim stage will get the claims, but everybody else gets a refund, where is the money going to come from? So basically, like I said, education is the only thing. You need to make sure. It's like, I gave an example of smoking. Everybody says smoking is injurious to health. Okay? Nobody says in schools, nobody teaches that you are free to smoke. Okay? They say that, 18 years or 21 years, whatever is the age, nobody proclaims, even in schools, that, once you are 21, you are free to smoke because you are an adult or whatever. Nobody says that in schools. Same way, the need for insurance, you have to say only one language. When you are teaching people in the media, in our own communications, only thing that you have to say is that everybody should have adequate insurance. And there is no way you can get back your money if you don't have a claim, and then you also get a claim when, unfortunately somebody is dead. So this is the main thing about insurance, and this can happen only through enlightenment, education.
Okay, good. Mr. Chog, you would like to take the question on the market share and reforms that may be needed, maybe 1 or 2 areas which you
I think you are seeing all of that happening. We have a pretty transformed regulator at this point in time, and honestly they're leading from the front. And we in our heydays, maybe a couple of months back or years back, wouldn't have thought that somebody would have come, taken the bull by the horn and started moving the sector in that direction. We got a right Pied Piper here. It is taking us in the right direction. And I think all of those that can anybody talk about in this panel is right happening there. We just paraphrase it and say it differently. So whatever you see in the sector happening from the regulator is happening. And if all of them happen, there will be I won't say UPI moment, but there is a significant upscale of life insurance.
Okay. Thank you, Mr. Chog. Just 3 more questions we'll take. Please go ahead, and the mic to be given.
Hello. Hi, I'm
This
Harsh.
is Sharad Chandra.
Well,
Here.
can we?
Here.
Yeah. Please stand up, please, if you don't mind.
This is Sharad Chandra.
Yeah.
Thank you for quite enlightening session. My question to the insurance guys are: I see the presentation every quarter, and the persistency ratio remains at the same level. 5 years down the 5 years after the policy is sold, only 60% continues, 40% are surrendered. So what has the insurance industry done in the last few years to improve the persistency ratio? The second thing somebody talked about, awareness. There's something called mutual fund awareness, mutual fund sahi hai. Nobody talks about term plan sahi hai. Thank you.
Okay. Mr. Kannan, would you like to take this question?
Yeah, the first question on persistency, you're absolutely right that the persistency has to be far higher than what it is currently for the customers to get the full benefits. But having said that, I have looked at the data for the industry as well as our own data. Persistency has indeed consistently improved during this last 5-year period. And during COVID, we had a little bit of a dip because of inability of the customers to pay on time, etc. But now the persistency has gone back to better than pre-COVID levels.
Okay.
But it's a continuous focus of the industry. Here, I would like to make differences between the traditional products and the linked product. If you look at the unit-linked products, even if the persistency is low, it doesn't bite the customer.
Yeah.
Because you'll have to return the money, but for some 6,000 rupees or of the order of magnitude of 1,000 rupees only company can retain. But the customer had to leave the money with the companies for 5 years. Then after that, whatever returns are coming, subject to a minimum of 4% per annum, it has to be returned to the customer. So traditionally, ULIP could be used, and I've seen ULIP persistency to be lesser, but customer doesn't lose, mind you. I want to just make it very clear that customer doesn't lose there. But on the traditional products, it's very important that the customer get to close to a 90% plus persistency to get the full benefits. And that is the work which has been going on. And I believe that if you deconstruct the industry into traditional and ULIP, traditional persistency is far higher than the ULIP persistency in the industry. So that's what I wanted. What is the second question? Second part of the question you had. Yeah, mutual fund sahi hai. We also started off. In fact, sabse pehle life insurance was our term, saying that indirectly saying that even before all that you should be looking at life insurance.
Sabhi se pehle.
सही से पहले
सबसे पहले life insurance. Yeah, but we have to work very hard on that. For example, we work with a lot of bank partners to give pre-qualified offers on the term plan. It's a journey, you're right. And even an industry has to give a sustained campaign, not the sporadic campaign like we have done in the past.
That's right.
But I take your point in terms of working hard to bring the awareness like the mutual fund industry.
Okay. Just 2 questions, please.
Hi, I'm Harsh. Excuse me, this side.
Okay.
This side.
Yeah, please go ahead.
I'm Harsh. And
sit down, please.
Someone of you said about the investigation period before the claim.
Yeah.
So what I feel is investigation is some type of field work which the employees have to do. So how did that work in COVID period? Did you had any other alternative to that, or you did something the same as it goes on?
Mr. Tripathi, would you like to answer this question? I'll come to Mr. Patnaik at the end last.
Investigation is not a very regular thing. It is generally done in policies where the policy duration has been very small or the sum assured is very high. In regular, generally for policies which are more than 3 years, we don't do investigation, just go ahead and pay the claims. During the COVID period, it was very hard, and that is why it took a bit longer to do that. However, as an industry, we were nimble, and many a times we took judgment calls to process the claims as soon as possible. But yeah, to your point, it is done typically by our outsourcing partners who will go in the field and verify.
Okay, last question.
If I can just add one point to this, there is one reform that has not happened as yet. Digital registry of deaths. Only 7 states today actually make it very clearly you have to register the deaths. Maharashtra is one of them, right? And then you get your death certificate and all of that. Only 7 states do it in India. If that was to happen, COVID, no COVID, whatever situation, even claim payouts, it gets a lot easier. So I think that's the conviction we need to get and convincing of people.
Go.
Excuse me, sir. I have a question on product innovation.
Okay, go ahead. Last question. Yeah.
Thank you so much. My name is Sumit and I'm from Aegis Federal Life Insurance. So just to briefly understand, when we talk about general insurance as an industry, it has moved like sporadically well in terms of product innovation through embedded insurance products as well as micro insurance products across the domain. Versus when we talk about life insurance, it is always a step behind general insurance when it comes to embedded insurance as well as micro insurance products and a few other product innovation as well. So what are your takes around what should be the next steps in terms of innovative product designing as well as followed by distribution?
Okay.
We are talking more about distribution, but we are not talking about product innovation. Ria.
Fair enough. Mr. Patnaik, you have the last word.
Thank you for the question. You see, when we compare with general insurance, so I think general insurance has a lot of needs. So automatically the product innovations will be accordingly manifold. But the life insurance need is limited to deaths, maturities, lifetime benefits, like whether it's ULIPs, whether it's money back. So when you see the range, it gets very limited. So within that range, you can design only. Then you can develop, innovate like children plans, marriage plans, education plans. And I think all insurance companies have some sort of things like that. And if you can suggest something, definitely we can innovate. There is nothing.
Okay.
Because that is what Sarma sir was telling. A lot of awareness, a lot of inputs. So the actuaries are there, the product innovators are there, the computer scientists are there. They are ready to design any product that you desire also. And it can happen. But I think enough products are there in the industry to cater to each and every need of all Indians. But the fact of the matter is that today also all Indians are not covered, and Indians who are covered, they are not covered adequately.
Okay.
Embedded insurance, you can have it. Suppose many of the, suppose bank products, they have embedded insurance. You have loans, there is embedded insurance. You have savings, there is embedded insurance.
Okay.
You have railway tickets, there is embedded insurance.
Okay. Mr. Sharma, you wanted to have a quick point, please.
Yeah, I just wanted to say, highlight the difference which Mr. Patnaik was making. You know, you have a phone crack, the cover of the phone cracks. You get in general insurance, you buy it, 20 rupees or something you pay and you get this policy, and the phone cracks and you can claim that, Can't happen with life. So what happens is, this is a longer product. And even the 1-year term life cover doesn't really serve the purpose unless, as you rightly pointed out, the persistency is there. So the persistency has to be there. And that is the difference between life insurance and general insurance. The innovations that come, like for example, travel insurance. When I buy a plane ticket, I can buy travel insurance for that 1.5 days that I will be traveling. I can't buy life insurance for that, I'm not, it's not like that, I buy life insurance only for that. That is covered by accidental cover. Life insurance I need to do for the entire life. So, there is a huge difference between that insurance, health insurance, medical insurance and all that, and life insurance.
Yeah, okay. I think we have to sort of call it a wraps on this session. Thank you very much, everybody. And we had a very engaging discussion. We began with a discussion with COVID. I think the insurance industry sort of really did well in managing the consequences of COVID on the way the claims were disbursed. A lot more challenges remain for the industry. Industry's policy sweet spot, as Mr. Anand rightly pointed out. And as Mr. Patnaik was saying, that the industry will be able to achieve its penetration level, raise it a bit, and probably by 2047, insurance for all would not remain a dream, but will be a reality. With that hope, we end this discussion. Once again, thank you very much, and I'm extremely sorry for having exceeded the time limit. And give them a big hand, please. Thank you.